The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. First of all, I want to make a correction. Yesterday, I was talking about there was only one Beach Boy left. Folks, what I meant was there was only one Wilson left out of the Beach Boys. I misspoke, and I feel very badly about that. But that's the way it goes. There are three, of them still alive. We have Bruce Johnson and Mike Love live on Sheffield Drive in Montecito, California, which is a site of, and Brian Wilson is still in the Los Angeles area again with his four children. He's playing Mr. Mom, and Al Jardine is, I believe, up in Carmel, still doing movie producing. But that's what I know. I do happen to know Bruce and Mike because they happen to be good friends of one of my good buddies, and I was able to meet them several times, which was fun. But let's move on to the markets. Okay, we have the chart posted for gold that we talked about yesterday. After we had that bottom form at 11.99, we have taken only 4 days to get back to almost at the 61% retracement now. That will come in around the 1265 level. The good news is for the bulls is that this thing has only taken a couple of days to get here. If it's really bearish, it takes as long as a few weeks. But when it comes this quickly, it usually means that we're getting ready to go. Folks, if we clear 1,300 in gold, we're going to be looking at a really big bull market that's going to last a long time, in my opinion. And the reason for that is that long-term pattern that is there on the long-term weeklies that we've looked at several times, that shows that incredible support at the 1,030 per ounce level, and that would take us above 1,500 in gold. I know that's a long way from where we are now, but frankly, it isn't, because if we just doubled what we did since December, we could be there. So watch the key level of 1303 or 1306. If we take that out, then we're going to be looking at. On the other side of the coin, if you'll notice the two corrections that we've had, they've been very, very shallow. They're both 38% retracements, and that's telling us that the market, is still in a bullish mode, and that's pretty much what we're looking at here. Silver's also picked up. We got above 1,700 an ounce, which is is good for the silver. And I still recommend that anytime you get a chance to buy one of those 1 ounce silver rounds, they're beautiful coins to have. And not only that, but I think long term they will be, I'm talking 10 years out, long after this show's gone to the boneyard, but that's something to have. It really is. They're numismatically very beautiful. Plus, I think investment quality, they're pretty good. And it doesn't take an arm and a leg of your paycheck to to buy a few of them. But it's also a pretty good idea. So that's what we're watching in the gold. Both of those corrections were really, really shallow, to the tune of about $15 each, and that is, very, very minor. And now, as you can see, we've already reached the top of that 1.27 banner here at the 1263 level. So this is 1263 to 1265 is the area. Should be some Fibonacci resistance in the gold. And if it's really bearish, it'll turn down and, turn down quickly. And but I don't believe that's the case. I believe any turn down you're going to get is going to be should be a buy, and we'll be watching for those buys if we do get to one of these corrections, or if we break out above that 1306 level. You do not want to be short that gold if it gets above 1306, because it has a potential to go a great deal higher. These gold stocks did not give up hardly anything. That's another reason to think that, you're at that really, really key level. Now, I've asked to bring up a chart that someone from the Den has sent us about the earnings, versus the S&P 500. What's been happening in this over the last few months? This is up through April. It hasn't changed much since that time. They asked me to discuss it. And frankly, I can discuss the chart, but I don't really understand the relationship between the earnings and stocks, because stocks keep going up and earnings keep dropping. So it just you just got to follow what it's been doing. I mean, ever since we made that beautiful bottom there on the 19th here of May, just recently, when we had all those beautiful ABCD patterns, it was really telling you the market wanted to go higher. So that's it. Well, we're at 1262 now in the gold. I believe 1265 is the exact fib point. 1262 is the 1.27 expansion of that last move. But folks, we were up $70 here in, let's say 99. We're up $63 in 4 days, and that's really a really interesting thing to look at. Someone from the Den sent me a set of 8 charts describing what the economy has been doing over these last 8 years. And, if you looked at those 8 charts, you'd have to wonder why stocks, would be higher, but they are. These were stocks of, what the Fed has been doing, the fact that what's been happening to medical care costs, what's been happening to unemployment numbers as far as people leaving the workforce, the home ownership, all of these things were shown on charts, but the market continues to go higher. You have to remember that the stock market is a market of stocks, and that's what it is. And you're right, Duffy, the Fed juice is there. We've had Shane Smolian on many times, and we'll have him on again soon. But we'll see, the Fed has just been pumping like crazy to the tune of $4.4 trillion. And when they start to unwind it, it's going to be easy, because we saw what happened in Japan when that occurred. But, until we go below that low of the 19th of May, we're still in a pretty strong trend. We haven't violated any of those numbers. In fact, even with the Dow at 18,000 yesterday, we did not do that. In fact, let me bring that up to you to show you the similarities of these patterns that we're looking at. Even with the strength that we've had this week, and we haven't violated it. And so that's the key. The key to looking at. I think the most amazing statistic about President Obama is he's played more rounds of golf than all the other presidents combined, and that's included Washington, who played 2 rounds of golf a week. I don't even think they had golf way back in those days, but who knows? I wanted to share one other chart on the Dow, and this is one that just shows some simple Fibonacci stuff. And it's for the fact that we hit the multiple Fibonacci numbers yesterday in this, and this is just over a short period of time, showing the relationship between the 21 days down and 13 days up, and the 1.27 and 0.786 retracement. This is a shorter term version of the chart that I just showed. We're going to have Norm Winsky on in about 15 minutes, so get your notebooks out. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've been asked to talk a little bit about the Japanese stock market. I posted the long-term weekly chart here. As you can see here on the far left, where we were making our bottom in 2008, 2009, we were making the very large ABCD pattern. Remember, this market topped on the 31st of December in 1989. You know, it kept going up even after our crash, and it was just under 40,000 in the Nikkei. This is when real estate was supposedly the area around the Japanese Imperial Palace was worth more than the state of California. And I remember the folks from CNBC were on, and they put a $1,000 bill on the ground in front of the palace in Japan, and they said that's how much real estate you could buy for $1,000. It was the picture of it was $1,000 bill, which has the picture of Grover Cleveland on it. However, the thing that we want to remember here is things change, and as you can see, they've been in a tremendous bear market, you know, for the last, however many years that is. That would be, 25 years. And the bottom there, when we made 2008, that was a consensus among all of the fund managers and everybody on Wall Street that there was no chance that Japan could go higher. And you can see what happened. It tripled in price. And so just because someone says it, and that includes me and everybody else on TFNN, you've got to make your own decisions. You have to, you know, add up all the stuff that's given to you, whether it's fundamentals or pattern recognition or Fibonacci, whatever it happen is. You have to take the responsibility for it. We try to give you some ideas. Some of them work, some of them don't, but basically more of them work than do. And so that's the key thing. And every once in a while, we get a king dollar from our fearless leader, like we had several years ago when the yen was way down there, the dollar, was way down there at around 73, and we had a big move. We might be looking at something like this in commodities again, folks, because we've had a situation that occurred over the last couple of days. There's been a potential frost in Brazil, which would affect the bean and soybean crops because they're harvesting there right now. As we start our growing, they have their harvesting, and that would really affect the balance of the supply-demand situation for beans, and corn, for the remainder year. Remember, we're only one crop failure away from famine in the world, folks. Even though we have a lot of it, some years it's used quite easily, and if we don't have it, that's when you really have the super bad problems, and you don't want to see that occur, because wars are started by famine and stuff like that, and you don't want to go through. Well, we have wars all the time, but anyway, that's neither here nor there. Okay, that covered the Japanese market. We wanted to mention that. We still got, silver and gold are still moving up well, which is nice. And so we should have all of these, moving in the right direction eventually as we get through the day today. I am not sure on the, one thing I do want to mention. Monday, we're going to have Bill Meridian on from Cycles Research out of Vienna, Austria. He's always a welcome guest. And on Wednesday, we're going to have somebody new. We're going to have Grace Morris from Astroeconomics. She's an old friend from many, many years ago, also a friend of Norm Winsky and also Bill Meridian. I mean, she's quite well known. And she's going to talk to us about IPOs that come out and how she uses the birth charts to predict what she's doing. And she has a really tremendous record, folks. So you have to pay attention to that. But you'll learn more about the birth charts and how she predicts some of these things. And she does a really good job. She has a good following. And not only that, but she's a really nice lady. And we'll have her on Wednesday. So that's what we're watching as we get into next week. Okay, the next one that looks interesting, folks, is one that is going to be really, really interesting to do, and we're going to take a look at it right now. And if you like pattern recognition, just pay attention to it, because if this market should start down, and this is crude oil going over the last 5 or 6 months, you can see the big ABCD pattern that is there. We had our first really major correction, where we had a 50% correction and a 1.27 expansion there in April at $34. That's after we made the double bottom butterfly pattern that's a Gartley pattern that we made in February. We made a one tick lower low, and now we've gone up and we've made this big ABCD pattern. And remember what Gartley said, you want to sell the first ABCD pattern in a bear market, and that comes in at, you can see there, 50.99. So far the high has been 51.15, and we're trading at around 51.04 right now. So if this thing should start down and get below I'd say $50 a barrel in oil, then you would be able to institute the sale, and then you could put a buy stop above the market and protect it, because this could easily have a similar correction that we had back in April, and that one was well over $7 a barrel. That would take us all the way down to the $43 a barrel, which would be the high of the old breakout. So 43 is what we'd be watching if this oil should happen to work, but it's got to get below $50 a barrel before you would think that the trend has been trending down. The reason why that would be important is it would take out the low bars of these last 12 hours of trading. And that means everybody that bought it during that time would now have a loss, and that would give you an idea that your price objective would be 43, your stop would be above 51, so you'd have an 8-to-1 risk-reward ratio on that, and that would be an ideal one, to formulate, because you don't see 8-to-1 too often. I've been asked to talk a little bit about the grains. I've mentioned before that that we do have a situation going on as a weather market in the corn and also beans, but the weather market is not here in the United States. The weather market is coming from South America, primarily from Brazil, with a potential for a frost. But that's it. We've left a gap on December corn. Believe me, folks, you don't see gaps on the corn chart, and they're all filled eventually. But the last gap that we had was on the downside in July of last year. And so now what we're looking at, is the gap on the upside. It will be filled, but the question is, how high is it going to go, until it gets to that level? There's some long-term weekly resistance up around the 444 a bushel in the corn, which is only 8 cents away. And but even wheat is starting to pick up now. They're sympathetic buying in the wheat, because we have plenty of wheat supplies right now. But the fact that we have this gap in the, I'm going to show you this chart because it's really interesting. If you'll look at this chart here in the corn, you'll see the old high up here is at 446, and if you'll look at the gap that we had on Sunday, you'll notice this is the gap. We gapped from 418 up to 420. If you go back to last July, you'll see a gap on the downside, and those gaps are filled. But a crop as large as the corn crop is, it's very hard, to have a what do you call it, a gap that's not filled. They're just filled. I mean, you can't find one. I looked, and they're just not there. 877-927-6648. Stay tuned for Norm Winski.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, back, folks, and I believe we have Norm Winski on the line. Norm, are you there?
Yes, sir. Good morning, Larry.
Good morning to you, my friend. Well, we have your chart up of crude oil, so you want to go ahead and get started?
Yes, sir. Just a 30-second run-through reminder for the folks. I was on here twice in May, once I think on the 5th of May. I alerted to the coming full moon and Jupiter going, I think that was direct, and we had a turn right there, I think on the 5th. I think it was And then we also, I was back on the 19th, and that was also to alert folks of the coming full moon and Mercury going direct. And those were both probably the best two lows of the month,
That's why
for
you're
the,
back again, partner.
for the stock market. Okay, I'm going to focus just on two markets this time, and one big date. One big window, I should say. Two events, one big window. We have Sunday and Monday. We have a Neptune theme. Let me just back up a bit and remind folks, maybe the new people that don't know. One of my top things with the planets are what's called a station point. What is a station point? Due to the relative motion of the Earth, all the planets are going around the sun at different speeds. And so we're here on the big blue marble called the Earth. And so it's like driving in your car and you're doing 60. Your speedometer says 60. You know you're doing 60. But if you look out your side window and somebody passes you doing 70, you might get the impression that you're going actually backwards by 10 miles an hour. It's relative motion. So that's what happens with the planets. So we're here on Earth. If you were to go out and plot the planets every night, you would notice that individually the planets stop their motion. That's called a station point, and then reverse the direction. There's two kinds of station points. There's a stationary retrograde. That's when it stops to go. Retrograde is backwards, and stationary direct. That's when it stops to go forward. So that's one of my highest batting percentages of planetary phenomena, one of my top things. And so the rule is when the planets change direction, the markets will change direction. And so just keep that in mind, because that's one of the things we're going to be talking about. The Neptune on Monday the 13th will be turning retrograde. Also on Sunday, we have a lineup with I use the U.S. chart. It's a natal chart is a snapshot of when something began or something was born. I believe the U.S. began on July the 4th, 1776. So I'm using where the planets were at that time, and so Jupiter is going to line up with Neptune from that chart. And then we also have Neptune turning retrograde on Monday the 13th. So we have a big Neptune theme here, a big Neptune theme. And here's your crude oil chart. I'm using August crude oil. And interesting that I didn't know that you were going to be talking about crude oil there, Larry. But there you go. So you can see technically we have a rising wedge here. And it looks like it's going to be running out of room here pretty soon. Price-wise, maybe just around 52 or a little less on August. And you're kind of running out of time too, because anytime you have like a rising wedge there, you're going to be running out of territory. They're running out of space, because it's converging.
Mm-hmm.
Okay.
Norm, I want to ask you to explain something to the folks, because you just went through this really good dissertation on the astrology, but really you're basically just looking at days, aren't you? I mean, it's just days between points. It's nothing more than cycle days that have exotic names, isn't that right?
I don't understand.
In other words, the different when Mercury goes retrograde, it does it on a theme of a regular time. It does it 4 times a year. And so there's days between those points. That's really what you're looking at. It's a cycle day.
Yeah, but I think it's smarter to let the planets tell you when that is.
Well, this is true, but I'm just saying sometimes it can be intimidating to people that don't understand, retrograde motion and station points and stuff like that. But that's the beauty of the astrology part, that it does give you some ideas that there's something out there that does work.
We have the people that are open to this. You have access to the greatest computer that anybody has. You can take all the computers in Wall Street and pile them up, and they won't be as powerful as the solar system.
And it's accurate.
Yeah, and so I think it works pretty well. Usually within one trading day. If it's not accurate within one trading day, for my work, I count it wrong. That's how precise I try to be.
Well, you've been spot on, pal. Fact is, you're going to had your anniversary date here on May 19th of last year, when you had the exact high on the new moon and Mercury retrograde. Plus, your calls in between have been pretty much spot on too. So there's certainly a lot to that. So you want to go to the next one now, or did you have?
So anyway, we have a big window here over the Sunday Monday window at the early next week. So that's why I'm on here, to alert the folks. By the way, June is a huge month. I can't even describe how much stuff is coming here in June. So I thought I'd keep it real simple, just focus on one window and whatever markets were related to that window. There's much more stuff coming later in June. So we'll be talking about how you can get that information because I'll be offering my June letter for free. Okay, since we're getting close to retesting major all-time highs on the S&P Dow Jones, thought I'd look at the longer-term S&P chart here. And here you go. Anytime you're testing major highs or major lows, it's good to go back and look at the big picture. And so we have the bigger picture on the S&P 500 daily chart. You can see here how this was the May 19th, 2015 high here. And we got, I think, 2137 overnight, topped about 3 in the morning. And based on the futures and some other indices, other indicators overnight. And here's where we're at right now. So we've got some overhead resistance here. If we don't turn down, I just had a pivot point here yesterday. And if we don't turn down immediately, then we could go up and test these highs. I would prefer, my personal preference is this is not my forecast, but it's a better setup for the month. If we get pulled back here, roll over and pull back into the Monday window, because that's both applies to crude oil and the stocks. Okay, so anyway, there's your big picture for the stocks. I'm going to zoom in a little bit now on the S&P 500 so you can see the detail a little better. You can see we're bumping up against the resistance level here on the S&P 500. And now we're going to, here's the really shorter term picture. This is 60-minute or hourly S&P 500 chart. You can see yesterday's close. We closed weak, and so we kind of broke a little short-term channel here. And so we'll have to see how things go today.
Okay, Norm, before we go on to, we're going to cover this again, but we've got a minute here. Why don't you tell the folks how they can reach you? Then we'll have a break, and we'll have you on right after the break, okay? So tell the folks how they can reach you.
Okay, I'm going to scroll down now to where my contact information is. You can get the current letter for free, and you get a free class with that. Class usually runs about 4 hours, and it's individual class, 1-to-1 on Skype. And you can reach me, and it's all free and because if you mention Larry, you get the double your money back guarantee too, Larry.
Well, we're going to be taking a break here in just a minute, and when we get back.
Here's my info here. So I'm in sunny Florida, and here's my telephone, 239-594-3939. You can email me at nwinsky. It's on the screen, NWINSKI at Embark, EMBARQ, like root beer, MAIL.com. Or you can Skype and norm.winsky.
Stay with us. We'll be right back.
Yes, sir.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of
trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, with Norm Winsky of Astro Trend. Norm, before we get to the S&P 500 60-minute chart, could you tell us a little bit more about this June phenomenon? I mean, you've been pretty emphatic about this, and I think we have to pay attention to you here because the work that you've given us for the past year has been spot on. Tell us what you mean by, June being such a critical month.
Well, we have huge cycles coming. It's like I said in my letter, it's like an all-star epic movie, giant, major production with all the top stars of Hollywood. This is, astrologically speaking, this is some of the biggest cycles, multiple cycles coming up here later in June. This is Neptune is like the first or second of a series. Some of the markets that are indicated for cycle culminations are, you'll be happy to hear, silver, and then we also have cocoa, hogs, and bonds, and the grains, soybeans, and so those are some of the markets indicated that are likely to have some cycle major moves, major cycle culminations coming up here in the latter part of June.
Is that around the 28th to the 30th of June by any chance?
Well, yeah, there's, let's see, I don't have that list right in front of me, but I can get that in just a moment if you hold on. Let's see.
We'll have you on before the end of that, so we'll certainly have you on again in June.
Appreciate that. So, yep. So we got the 16th, we got the, when the moon's north node is 120 to Pluto. And then we have Saturn 90 to Neptune, and then we have the Jupiter is going to line up with the moon's north node. That's on average a 7.4-year cycle. And then we have Jupiter 120 to Pluto, and so it's got three more big things coming after the Neptune retrograde. Now let me talk about Neptune retrograde just a little bit more. If you go back and look at your charts for the past several years, you'll notice that Neptune has been going retrograde in June every year, and that's about the time that crude oil seems to top out every year. Have you noticed that, Larry?
No, I hadn't noticed that, but that's good information to have for sure.
It seems to coincide with a seasonal top in crude oil every year the last several years. And I have a theory that I have sort of a rule that when the ruling planet, Neptune is the ruling planet for crude oil, and when the ruling planet for commodity goes retrograde, that's usually bearish for prices.
Mm-hmm. Well, you've certainly been spot on with the retrograde of the Mercury that we watched in the stock market. That's certainly been true.
Mm-hmm. So what you want to see for the crude oil is just to augment what you said earlier about the crude oil, Larry, is that it'd be the ideal scenario, in my opinion, is if we can hang up here near the highs on the crude oil. I'm going to go back to the crude oil chart here. Just kind of hang up here just for a few more days till we get to late this week or early next week. Maybe Monday would be ideal, and then we could top out and then roll over. That'd be the ideal scenario for me.
Mm-hmm. Well, that would set up pretty good. Now, the last chart that we have is that 500 S&P 500 hourly chart.
Yes, sir.
And we are touching yesterday's high right now as we speak, and that's right back into that same zone that you were highlighting yesterday. Then.
Yep. So if we start making new highs, then well, that will get canceled, invalidated, and then we'll be set for higher high. That's the maybe all-time highs by Monday. And then Monday's going to be your next major pivot point.
Okay, we have a question from one of our dinners about the gold market because we rallied $65 an ounce over the past 6 or 7 trading days, and we're up to this 61% retracement here on the gold at 1265. Do you see anything in the cycle crystal ball that makes you interested in gold here?
Only what's the word? Tangentially. Peripherally, whatever you want to call it.
Whoa! This is Terre Haute word, man. Tangentially.
There you go.
Let's try English.
No, I mean it's a low priority in that there is a remote connection between in Neptune, which is inflation, and gold. So Neptune is going to turn retrograde on Monday, so you might want to be cautious there. I think the silver market. I just do what the planets tell me. The truth is, I really don't know that much. I just do I'm a reporter. I just report what I see with the planets, So the planets are not highlighting gold now. So they are highlighting silver for later in the month that we're due for some sort of cycle culmination. I'll tell you a quick story here, Larry, about Jupiter and the moon's north node. That's a mathematical point. As the moon goes around the Earth, it's an 18.6-year cycle, that point. And so about every 7.4 years, Jupiter gets together with the moon's north node. That happened in the sign Cancer in the year 2000, summer of 2007. Cancer is silver, the moon's north node being associated with the moon, which is the ruling body for Cancer. So you had a huge Cancer silver theme for the summer of 2007. Back then, silver was trading, had been going down, and it was trading down to about $4.20. I looked at that and said, wow, this silver is cheap. I got this big cycle culmination here. I'm going to buy silver. Shortly thereafter, it had a nice rally up to about 480 or so. That was 60 cents on the big contract, so there was $3,000. That was a nice little trade. And then it went back down, and I got out, and then it went back down and retested the lows, and somewhere around August or so, I said, well, we're retesting the lows. This stuff's cheap. I think we may have made a major low. I'm going to buy again. I was long the silver, and then we had the 911, and the buildings came down, and then there was a big scare at the COMEX where they were trading the silver, that they had all the silver, the vault, where they kept the silver for delivery, was buried under the rubble. So then the silver ran back up to about 480 or so, and I got out and made money on the 911 thing.
Wow. What is your most amazing call you've ever made, Norman? You've been doing this for 40 years. You had one that sticks out in your mind as, the one that you had to put a gold star on it?
I don't know about one. I got lots of great stories about everything from, back when I was on the floor, I'd trade individual stocks, and I had basically using the astrology, you can have legal inside information. I knew what was sometimes going on better in companies better than they did. I had where I was consulting with a client of mine, and he was interested in some oil drilling company, and I was telling him the forecast. And I didn't know it. He was calling up the company and telling them my forecast of when they were going to hit oil. And he thought they thought he was crazy, but I was hitting it. They were they were like, it was the mid '80s, so when the bloom was off the boom in the oil business, and so they were on the verge of bankruptcy. It was their last roll. They were out in the middle of the Western Egyptian desert where nobody had ever drilled for oil before. So they were rolling the dice for the last time. And they were doing some test drilling out there and said, oh, well, next Tuesday they're going to find oil. They're going to have a good sample. And sure enough, it hit, and I kept doing that. And then so one day I call up my guy, and I say, okay, well, here's the forecast for the next week or two. And then he goes, great, I'll call the company now. Then my life flashed before me because I saw myself in a prison, in orange, in an orange suit. I was going to prison or something, because he was talking to the company. And I said, what are you doing? He said, oh, I've been telling some vice president at the company there what your forecasts are. And now he's been calling me, asking what's going to happen to their company next.
Well, listen, we got to take a break. We'll have you on later in the month, but thanks again for joining us, buddy. It's always a pleasure.
Okay, thanks a lot, Larry.
You bet, Norm. Bye-bye. Norm Winski of Astro Trend.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we want to thank Norm Winsky for being on. We're now having a nice move above the 1264 level in the gold, which we said was going to be some 61% retracement, but in fact, we've gone through that. This gold and silver looking more and more bullish, folks, in their own right, not into the fact that they're being pulled up by the weather market and the grains, but the gold in particular, after we made that bottom at 11.99 has started to come back. We're up $67 off that low in just 6 days or 8 days. So that's a really strong thing. So, anytime you get about a $17 or even $34 per ounce of retracement in that, you want to start looking at this gold and silver because they've got a chance for something really spectacular. One of the things that I'll do for the newsletter this weekend is go over that weekly scenario that we've been watching here to see. Remember, these markets repeat over and over again, and what we saw in the gold since the bottom we made at 11.99 was a $15 pullback to 12.08, and then again we saw that yesterday at the 12.38 level, coming down $15 from the high at 12.47. And now we're ready to complete that big ABCD structure at the 1270 level, which is not very far away. We've got gold up about $20-some. So that tells us that we're starting some really bullish things going on in the market right now. So that's what we're watching so far. It's going to be there. It's 1267 in the gold. So we're starting to move up even better, which is a which is a good sign for the bulls, a bad sign for the bears. But the bears, they have, basically gone in hibernation in that gold market after that 1,200 level held. There were a lot of people that started to come back into the gold market. And, the open interest started to increase, and we've had a really nice move in silver. Just in the last day, silver's moved almost $1 an ounce, folks, from 16.20 to 17.12 has been the high today. So that's almost $1 move, and we're still trading, so we could still be looking at great. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.